Bitcoin has progressively moved down to grab two fair value gaps recently. In this video, we're going to be covering the most recent price action for BTC, what I think is likely to happen next, and also take a look at a slightly larger view on the macro scale for Bitcoin. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not consider subscribing as well? Above and beyond those two things, check out our Discord server, linked in the description below. It's the first place we go to notify you of everything that is going on in the crypto space. So keep your finger on the pulse of crypto by joining us down in Discord. Let's waste no time though. Let's jump right down into what is going on here with Bitcoin, right? So here you can see that the last fair value gap that we grabbed, and this is something that we put out on Twitter yesterday as well. I've also added a few more for the daily timeframes, which we'll probably take a look at later in this video. So we can see here 26,895 to 27,070. Okay, as you can kind of see, we grabbed all of that. It's when price moved down a little bit deeper. This is something that we're talking about yesterday, saying that it's likely to kind of tap down. We actually saw this down here move up just briefly and getting rejected on that 250 EMA. We can see that there, right? Rejected on the 50 EMA and closed below the 200 EMA. We were just about to get across on the 1 hour 50 200 EMA, and that would be basically short-term price action crossing down lower than long-term price action. So again, that would look quite bearish for Bitcoin here. So on our smart money concepts here, which is what we're tracking, we still have our bullish structure. We can kind of see that right in there. We still do have that. This is after, of course, switching around a little bit, right? So we were bearish, we turned to bullish, then we turned into bearish again, then we turned into bullish again. And, I think we're on the cusp of turning potentially back into another bearish state of play. So our structure is a little bit all over the place from a smart money concepts point of view. This is actually by design because it allows for the institutional smart funds to basically grab liquidity, right? They're able to push the price, create pockets of liquidity, and then extract the money from the market. Okay, so this is an indication that they're not really necessarily focusing in on long-term holds, but instead are focusing in more on the short-term liquidity grabs, and a good way to kind of make revenue during these bearish times we find ourselves in. And that's a bit of an indication as to kind of where their minds might be at the moment. You can see the equilibrium is right up here. This is going to be the obvious area of rejection. And we can see that this particular area is basically 27,100, just a little bit north of there towards 27,222. But ultimately, these red areas that you see, these ones just here and these up here, these are internal sell order blocks, whereas the green order block is down here. At the moment, this is actually something that is not looking overly strong in my opinion. Yes, we moved out of here, but we came down pretty deep into this range before we started to see that push to the downside. So what I'm going to do is I'm going to remove our yellow box. We don't need that. There's no more fair value gaps on our 1 hour chart here from the smart money concepts point of view. Now, if we come down into our Elliott wave theory chart, the big issue or big thing that I'm kind of tracking here, I say issue, it's not really an issue, but the big thing that I'm tracking is we can see some interesting kind of structures. We have a 1, 2, 3, 4, 5 right there. And then we have a wave 1, 2, 3, 4, and 5 here. This fifth wave movement is looking like it's an overextension with a wave 1, 2, 3, 4 potentially still got to come down in 5. Now, this is important, right? And I know this is quite complicated. I know a lot of people don't understand Elliott wave theory fully, but here we can see 1, 2, 3, 4, and 5, right? And then we have contained 5 waves within each, okay? And that's important because that allows us to look at the structure of this as a potential wave 3. Now, that wave 3 only comes into play if this next fifth wave movement to the downside completes at $26,582 or lower, okay? And if that is the case, then we find ourselves in an impulsive structure here to the downside, okay? And we'll bounce up a little bit before going down once again, okay? And then there we can see that we have another 5-wave structure that sits just outside of this move to the upside. So if we did truncate and finish our 5th wave down here, we can now look at that as our wave 4 going up, and then we've got to come back down into another, another 5-wave structure. Now, that would be wave 1 here out of a potential 5-wave pattern. So wave 1 up for 2, down into 3, 4, and 5, and so forth. Now, that's way off in the future, so I don't want to necessarily kind of drill down into that just yet, because there's a lot of things that can change between now and then. Ultimately, we're looking at 26,582 or lower to complete our structures. based on the existing high of our fourth wave movement, that is very achievable. In fact, going down to our typical 1.236 is going to hit that. So it doesn't look like that's going to kind of fail on us right now. Now, invalidation of this would come in here at $27,023, right? So if price does go up higher than that, then we can kind of mark this one off as not necessarily what was going on. We can't rule out a diagonal though, so we have to be a little bit cautious with that. So at least we know, at 27,023, we're going to have to readdress what is potentially going on here from an Elliott wave theory point of view. But let's go ahead and roll this up a little bit into our daily, right? Because as I said, there are some fair value gaps on our daily chart that are concerning, right? The one that we're kind of going down towards at the moment is the 25,167 to 26,578. This particular range is the first fair value gap that I think has to kind of fill out. Now, doing this one is basically just, I say doing this one, but coming down and filling this gap out is basically just going down to our 200 daily EMA. That's 25,137. We can wick down a little bit lower than that, grab the fair value gap, and yet close above the 200 EMA. That basically would be a good place to think about maybe a bounce to the upside at that point. Now, as you can kind of see, we have an equilibrium down here, and this one sits right inside this fair value gap at 22,150 to 23,976. And so this one is interesting to me because that fair value gap coinciding with equilibrium is telling me that would be a nice place to think about a nice strong bounce to the upside. Okay, equilibrium in price, they do react. So if you lose it, then you go down to your next fair value gap. But if you bounce from the equilibrium, we could probably be talking about bouncing from 22 back up towards that 25, 26K range pretty comfortably. You might find that actually you find resistance on the 200 EMA in that particular case, if we do, of course, lose the 200 EMA as support previously. If we do go down lower than equilibrium, the next fair value gap sits at 20,686 to 21,813. And again, this point here will be the bulls trying to make sure price stays above $20,000. Failure to do that, then you're talking the 19,117 to 19,888. Once all those are done, you've kind of filled all your daily fair value gaps. That doesn't distract from the two big ones that are here on our weekly time frame. This actually goes down to a low of $17,127. And so we've got to be a little bit cautious from time to time when we see these fair value gaps. I still look at this as a bearish setup. We're going into higher highs and higher lows, and these do have a tendency to break upwards. It's been nothing, in my opinion, more than a bear market rally to the upside here. And so a break to the downside to these fair value gaps, I think, is essentially what's realistically going to happen. And the reason for this is that basically smart money pushed price upwards to create pockets of liquidity. They were basically seeing sales of Bitcoin from large institutional investors over into smaller retail investors. Retail investor wallets have been on the up all the way through this period here, right? There's an increase, new all-time highs in terms of wallet counts that have at least one Bitcoin in them. But at the same time as that is happening, that Bitcoin that is being sold to the retail investors has to come from somewhere, and it's been coming from whale investors, right? People who have over 1,000 Bitcoin, they've been selling, right? So as price has been going up, they've been selling into that movement to the upside. So the wallet counts for 1,000 Bitcoin or more has actually been on the decrease. Not so much over the last maybe kind of 2 weeks or so. They've been kind of pushing upwards a little bit. They've been buying this recent dip here. But for the most part, it looks and appears that actually whale investors have been exiting out of the space pretty much since March, I think it was, 2022. They've been aggressively selling since then, and they'll sell to anyone who is willing to buy it at those prices. So it's not unusual that we have seen fair value gaps get stacked up like this. It's not something that we would normally expect to see, but considering the circumstances that surround them, I'm not too surprised by what we see there. And I think it's an inevitability that at some point we're going to have to fill these gaps out. It can, of course, happen much later down the line, but at some point, I think we're going to have to come down here. And obviously, if you're watching the podcast that we kind of do on the podcast channel every few days, then you'll know that my concerns are around some of the many different things that are happening fundamentally in the economy, everything from housing to the debt ceiling through to credit card debt, savings accounts, and so much more, right? Inflation, deflation, and various different things with recessions and whatnot happening at a global scale. It's hard to think that there's going to be surplus amounts of cash to just throw straight into crypto, and not from the retail side. And if anything, I think the retailers are going to have to start selling and liquidating some assets as times get tougher. And so I think realistically speaking, the smart money is just waiting. They're just waiting for these things to play out, waiting for the retailers to actually start to feel the pain and then start selling. Once the retailers start selling their assets, then I think your smart money will start coming into the space. But until then, preserve capital, I think, is ultimately on the minds of these wealthy individuals and institutions. So for now, we can see that there's a logic here to take Bitcoin into these lows. There's very loose logic here of a move to the upside. Psychology, tracking the behavior, shows us with moves to the downside. Fair value gaps and smart money shows us with moves to the downside. And higher highs and higher lows shows us a move to the downside. There's very little here to kind of be supported the move to the upside. There's only one that I can see, which is the opposite of what I was just saying. Essentially, we are currently on a smaller time frame here in the position to say we are lower highs and lower lows, and those have a tendency to break upwards. Okay, so there's always that potential. So a couple days ago, or maybe yesterday, day before, I was talking about a move to $30,000. That still technically is possible. We'll see how things kind of develop here. But ultimately for now, we want to be a little bit cautious with what might happen next. One of my biggest concerns is that we have some kind of diagonal structure right in here. Okay, we come and fill this gap out, for example. We do this kind of diagonal. We then push up, but fail to break 31K, and then we're in this kind of big wave 1, up here for wave 2, come down here for a big wave 3, then bounce for 4, then down to 5. And if we do that, then, well, we're going down into new lower lows at that point. So, you know, that's way off in the future. There's lots of things to kind of think about. But for now, I think ultimately we want to kind of track what's going on. We want to make sure that we're on the right side of the larger institutional investors, make sure that we are aware of their moves so that we can be basically going along with the ride. We don't want to be going against the grain or anything like that. So ultimately, yeah, it's looking pretty interesting. Again, from our monthly time frame, we're almost up in this overbought range. It's a little bit concerning. From our weekly time frame, we're getting rejected from the supply zone. This is basically 28,881 to 31,848. We did find brief support on the weekly 50 EMA. If we lose that, then we're talking about the weekly 200 EMA coming in at 24,000. And again, that 24,000 comes in more in line with our basically losing our daily 200 EMA and coming down more towards that second fair value gap on the daily time frame. So for the most part, everything here for BTC is looking like it can go both ways, but I'm leaning more on the bearish side right now. I'm thinking that there's limited moves to the upside to be had, but I am expecting a move to $30,000 at some point. I just think there's a little bit more progression to the downside before we get to that 30K range. But let me know what your thoughts are in the comments down below. And if you have found this useful, informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Don't forget to join us down in Discord, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.